Welcome back to the YouTube channel. Today I got a really interesting topic, and today we're going to talk about what it takes for your house to actually decrease in value once you've purchased it, or that you cannot qualify for a loan. And we're going to talk about some factors that take a huge impact in basically you being able to buy a house and actually keep it. And I haven't seen videos out there like this, so let me know if this is something you'd be interested in or not. Let me know. So today we're going over what the ongoing costs are. So let's say, for an instance, you're going to buy a $500,000 house and you take out a mortgage for $400,000. So when you do that, the mortgage rate is going to stay the same. So your mortgage payment, if you didn't take out an ARM loan or something else, is going to stay the same. But then there are variables. So property taxes is one of them. That's going to go up probably about 2 or 3% each year. In Vegas, I know they cap it 3% for residents and 8% for if you're an investor. Every year that property taxes goes up. So when I bought Lindsay Lane in California, I had a house and I purchased that for $574,000. But the assessed value of it and property taxes I've paid for was close to $9,000 a year. So that is a cost that's constantly going up. I've seen some cases that they go down, but most cases they go up because the state needs to make money. And if they take that away, somewhere else they're going to tack it on double. So what do I mean by that? Well, when you're going to buy a house, you have these unknown factors like property taxes that might go up and insurance, because your mortgage rate most likely is going to stay the same. So now let's listen to people that move to Florida and are in a huge dilemma with their insurance and why they're probably not being able to afford their houses anymore. So let's look at what the news has to say.
Covering the price of paradise here tonight, and inflation is hitting Florida homeowners where it hurts the most these days. Property insurance. We already pay at least 3 times the national average in premiums to insure our homes. And now a new international study finds the United States experience.
Okay, so we are about 12 seconds in, and they're already saying that Florida homeowners are paying 3 times the national average in homeowners insurance. So let's ask Google, what is the national average of homeowners insurance? Let's see. So the national average of premium is $1,428 per year. So that is, now we can bring out the calculator, and when we do that, so we're putting 1428 times 3, so they're paying about $4,200 a month in homeowners insurance. So divided by 12, that is about $350 a month that they're paying. They're paying 3 times the normal average. That's crazy. Let's continue.
It's a 30% increase in the cost to replace a property in the last 5 years. ABC Action News in-depth reporter Stassi Almost continues her in-depth coverage on this growing crisis, getting an inside look at what it is now costing homeowners and why.
Oh, instead of paying $2,500, now you're going to pay $5,000.
Polk County homeowner Mike Johnson is irate.
So 31 seconds in, and we are now checking out what causes that to do it. And those costs are insane, and if you're retired and on a fixed income, you're going to be in big trouble. So let me know before we go any further. Let me know why you think just because the house replacement cost rose by 3 times the cost. Let me know what you think in the comments.
About property insurance costs.
When you send me a bill that's 87% higher, in what country?
When he bought his home in 2014, his premium with Olympus Insurance was just below $1,000. In 2021, it went from $1,200 to $3,000.
They came back and said, well, if you have your roof redone, we'll take it back to the $1,500.
Johnson wrote to the governor and the Department of Financial Services. DFS responded.
Okay, so we're seeing here with this poor fella that he bought a house in Paradise, Florida. Great state. I lived there for years. And he now just got screwed because his homeowner's insurance is 3 times the amount that it was before. And he doesn't even, according to the video, if that's stock footage, I don't know where he's exactly at, but that looks to me like it's just in the middle of Florida and it went up 3 times. So now we're going to see why it went up by 3x, and we'll see if this is the exception or if this is the rule.
Stating that the Office of Insurance Regulation had approved a 55.9% rate increase for Olympus, adding there are additional factors which impact premiums, including claim history, age of roof, operating costs, costs for reinsurance, and projected losses.
I ended up switching companies. I switched to Allstate.
Allstate subsidiary Castle Key insured his home as is for $1,800. It jumped to $2,500 in 2022, and his most recent renewal
To almost $5,000. It was an 87% rate increase.
I went through the policy coverage and found the company is claiming the cost to replace his home has gone up $7,000. And
So now we're back at the $5,000. How ironic. Just because you switch insurance company, they're going to jack up the rate regardless. If you live in a place like this, there's nothing you can do. You're going to pay. You're going to pay regardless. And guess what? There's somebody in debt, when the state approved it, somebody made some money. Let's keep watching.
The last year, it states the total premium includes a $2,131 increase due to rate change.
They say it's going to cost $637,000 to redo the house. That's incorrect. You can rebuild that house for probably $300 or $350.
I reached out to Allstate to ask about Johnson's 87% increase, and they told me in a statement the cost of providing reliable protection for Florida homeowners has risen dramatically from factors like inflation and extreme weather. In recent years, Florida insurers have claimed financial distress from excessive lawsuits, but now agent and president of South Shore Insurance, Michelle Mosher, says inflation is also hitting homeowners.
So when we run a replacement estimator, part of that is how much does it cost the insurance company to go back and rebuild? Not necessarily what you're purchasing it for, but the construction cost.
A new study by the International Insurance Society finds the U.S. leads the world with a 30% increase in the cost to replace a property in the last 5 years.
Now they're basically saying that they cannot get the labor cheap enough or the house that is now. So let me say this again. So now the insurance company is saying if you're gonna rebuild the house, it costs you so much more because everything during the pandemic and so on went up so much that the house price to replace that, even if you bought it for $500, it might cost insurance or somebody to rebuild that house $600,000-$700,000. So I don't know if that's true or not. I'm not a home builder in Florida. I don't know the lumber prices in Florida, and I don't know how they build houses down there. But let's keep watching.
Years. Mosher says homeowners could consider cutting coverage in other areas if they have to.
What about your personal property? Or what about your loss of use? Or what about your deductibles? There are things there that we can tweak. There are things you could decide to self-insure, like your screen enclosure.
And overall,
I also think it's very interesting that when you're replacing a house, most of these people that do that kind of job are very skilled workers, and they also want to make a living wage. So when everything goes up, their wages go up, means you're going to pay more for the house. So I kind of see that, and yeah, it probably did go up by 30% because just the wages from the workers went up. So I can see that. Let's keep watching.
She says speak up and contact your local state reps. If you could say one thing to your representatives, your governor, what would you say?
Tell them to stop screwing people. They have to have a resolve so that the people that are going to live.
So now we're talking about self-insurance. So what they're basically saying is, if you have enough money in the bank, you can self-insure your own property. So if you have, I know in state of Florida, when I lived there, you can also self-insure. You can self-insure yourself, and you just need like $10,000 in the bank, and you can do that by yourself. But yeah, in where I'm at right now, I don't know if that's possible. I would not recommend it. Talk to a lawyer if you want to do something like that, but let's keep watching.
In Florida, can't afford to live here.
In Polk County, I'm in-depth reporter Stassi Olmos, ABC Action News.
All right, let's go further in depth on this here tonight with new data from the Insurance Information Institute. Their analysis finds that if insurers don't raise...
Absolutely wrong. There is nothing that says that you should actually be able to afford where you want to live. I also want to live in Beverly Hills, but I don't have the money to live in Beverly Hills, so I live in Las Vegas instead. If you can't afford where you live, you need to move. That's just how it goes.
rates to cover the cost of inflation, they would run out of money and end up in insolvency. Now, this chart here shows that in 2021, the cost to replace a home skyrocketed. Insurers have also had significant storm losses. Companies are now pulling from their policyholder surplus, but if their expenses exceed their revenues by too much for too long, the Institute says they do risk insolvency. All right, let's take a live look outside on this.
So basically, what it came down to is that these poor people that were not prepared for that kind of increase are now having to pay. And I get that when there's hurricane damage and winds and hurricanes and flooding, that is something beyond your control. But when you move to Florida, you need to be alert that there are catastrophes that happen to that state. Same as if you move to the Panhandle, Florida, Louisiana, Alabama, and Texas, they have hurricanes there. And some of them hit harder than others. And just because it didn't hit today doesn't mean there's not going to be a hit tomorrow. So when you buy a house today for $500,000 or $200,000 and you can afford it, that does not mean if you live in a state with natural disaster that you're actually going to be able to afford that in 5 years. And I see a lot of people in Florida actually struggling to pay that. And if you live closer to the coastline, your premiums are going to go up. And it's the same in California. If you live in California and you live in the hills in California, like in LA, where you're just more into the fire zones where a wildfire could happen and wipe out your house, you are paying more than that. And so what do? You need to move to a state that you actually can afford and doesn't have those natural disasters. I know that sucks, but that's just how it is. And if you do not like that, there's no way that insurance companies will say, hey, we're gonna pay John Doe or whoever every 4 years to get a new roof and get a new house. It just doesn't work like that, because it is so unfair for me to pay Allstate money and somebody in Florida constantly gets a brand new house because it just gets wiped out in the storm. And every few years, they get a new house. And I know people are going to yell in the comments and say, oh my gosh, that's so harsh from you. But hey, if you saw Fort Myers and Cape Coral, how it got destroyed and people basically rebuilt their houses, it's crazy. And when you have a collective stuff, with insurance in your state, it should be able to self-fund. And that's pretty much it for this video. Let me know what you think, if you agree or disagree in the comments, and I'll see you in the next one.